Andy Gurczak joins me here today. You can learn what his team is up to. Go to allcityadjusting.com, allcityadjusting.com. We're going to be talking about filing insurance claims and why it's so important to have somebody like Andy and his team helping you through some of this process, especially with your multifamilies. I really appreciate your time.
Jack, thanks again for having me. I know this is the second time, so I feel honored to be on your show again.
You know, Andy, we're not going to spend a ton of time on this, but it's always interesting. Can you kind of go through the process of how you found your way into this and what motivates you to help people with this process?
Yeah, I mean, there was a time when I was doing construction where found a mentor that was doing this. He got me in, was with him for about 3 years. He taught me the entire business. And that time I was also involved heavily in construction. I had a construction company, but really found a liking to this part. I knew construction, I knew estimating, I knew, that part very comfortably. I can discuss construction methods, what it's going to take to rebuild something. So that part fit in with this. And then the negotiation and the negotiations, understanding policy, the terms, all that, really enjoy that, learning that. And then eventually helping the people. Because what I really saw was, people really loved when you were able to help them and get them a large sum of money, get their claims paid. It was the construction part that I really didn't like, that there was always issues or stuff that came about. But until the adjusting part, people loved you. So I really just wanted to stick with that. And it was easier to scale that for me into different states than it was construction. Felt really with my clients, built a good client base with investors, landlords, built our licenses and our locations based on our clients growing their portfolio. So just everything kind of worked out, fell in place for me.
You know, insurance companies, we carry insurance because we're trying to cover our butts on a few things, but in the end, our interests really aren't aligned with the insurance company. What are some of the main mistakes you've seen real estate investors make when filing a claim?
Yeah, there's many, whether it's saying too much over the phone, just telling them the whole life story, then claims getting flagged, delayed for no reason, or denied in general, saying the wrong stuff. So besides saying too much, saying the wrong words, using the terms like mold, flood, there's so many terms that people use that aren't covered claims. Sending in the wrong documentation. It's just doing stuff that they've never handled claims. And so you have to look at, the insurance companies are a business, right? They're in a business. Their model is obviously, if they just paid everyone millions of dollars, they wouldn't be in business, right? There's been a book written about, there's many books written about this. So they're in business. If they can underpay a claim and not on purpose, they just, hey, burden of proof is always on you, Jack. You have to prove to them what you owe. If you don't know any construction, you don't know any estimating, you don't know any insurance laws or policy language, how are you going to do that, right? So a lot of people just thinking they can do it on their own is their biggest mistake.
Could you go into your site, you mentioned identifying miscategorizations or missed line items. Can you talk a little bit about how that can significantly increase your claim?
Huge. So we both, our company and insurance companies use one software, right? There's two softwares, but there's one that's a main specific software we all use. It's called Xactimate. And that software, and I'll just give you a quick example. We don't go all day into line items, but one big one is the software gives you, when you're building an estimate, it lets you build it two ways. New construction, which is you're building, ground up, there's no obstructions, nothing. Then there's the restoration, remodel estimation method, which takes an account for you have to walk around wood, you have to walk around different material. Well, if I have $100,000 estimate built with the new construction method, if I just change it to a restoration line item, it's going to up that estimate 20, 30,000, right? A lot of insurance companies are using new construction method on estimates that should be restoration, right? And just by that, they're dropping huge, huge amounts of money for people just by one little click, right? So, I mean, I could go into each line item, but that line item, just switching the estimate to a different mode, which shouldn't be, right? The new construction should only be used if we're literally pouring a foundation, it's all brand new. That's what the program even states, right? It has a definition of when to use it. But insurance companies are getting away because if no one calls them on it, then, and people don't know. How would you know if I didn't explain it to you or you?
Could we talk about the insurance policies for a second? Let's say somebody is managing multiple properties. What should they look for in their insurance policies to ensure adequate coverage?
Hopefully you have the right agent making sure checking in with you on your properties. But I know one, for example, State Farm, and I'll go to State Farm because most people know State Farm or even have them as an insurance company. But one that's common now is lawn ordinance coverage, which is coverage you have for, let's say you had a fire and now you need to install sprinklers in your building, or you need to hardwire all your smoke detectors. So that upgrade or that extra money now that has to be put into that claim they owe you, that the city now is going to require, the insurance would pay you, right? That's an additional coverage. It's very, very minimal. It's about $20, $30 a year per property for a whole year. It used to be automated. So when you got your premium and you bought a rental with State Farm, it was already included. Well, now it's additional coverage. So I've had people that have come to us, have claims that they don't have that coverage. And they're like, well, we didn't know. Well, the agent never told them that, State Farm, I know years ago, took it off as an automatic inclusion. And now if your agent doesn't tell you, you don't have it. And it's like I said, it's a very minimal, $20, $30 a year. And it's, thousands, like 20, 30, 40, it's a percentage of your coverage. So it can really start adding up. And if you don't have that and you have an older property, I mean, you're out of pocket for those expenses.
Hmm.
And that's just
So,
one, right? I'm just trying to give you one example.
Yeah, no, I completely get it. Like we hear the term endorsements and a few other things when it comes to insurance. Is there any specific endorsements or policy types you recommend investors look into?
In terms of endorsements, that would be that law and ordinance coverage. Make sure you have, that's a very important coverage. Sewer backup or water backup in your basement. If you have a finished basement, you have a tenant in there, make sure you have a water backup endorsement. That's very important. There's also, if you have an older property, I would say maybe 50, 60 years old or older, there's a service line endorsement. Not every insurance company sells this, but it's called the service line endorsement. It's $20, $30 a year. And it's basically covers, let's say you have pipes going into your home from the street. Well, you remember it used to be all cast iron, 3-foot sections. Those cave all the time, right? One section caves in,
Mhm.
and now you have no, your water's not, is you're backing into the property or it's not draining. Well, that service line endorsement, we had a client that had that we ended up getting paid, actually pays to replace that whole pipe from the outside. Because most policies, they don't pay for anything outside of your property, no pipes, no drainage, nothing. That service line endorsement could save people a lot of money, especially on older properties.
Hmm.
And it actually covers damage from tree roots or anything that caused it to made that pipe crack.
What steps should an investor take if their claim was declined or underpaid?
Well, hopefully your claim didn't get denied, and hopefully but if it got to that point where it's been denied, definitely get, whether it's us as a public adjusting team or another public adjuster, and understand each public adjuster does something different. There's maybe a small percentage of public adjusters like our company that handles large loss, fires, water, investment properties. And then majority public adjusters still just do storm damage. They'll do wind, hail. So make sure you're calling the right public adjuster. But you want to call if it's been denied, you want to call because again, we've reviewed claims. Not always we can help, but if we can't, we can still then present it to attorneys that we work with and see if they can help take on the claim. Right now, if it's been delayed, you want to, if you're getting any mixed signals, because the time to hire a public adjuster is right in the beginning. You want one on your team, but if you don't, you want to hire one as soon as possible. So then the public adjuster is doing the negotiations for you. He's discussing the claim, saying what happened and who was involved. And it's leaving the insured kind of, we're the buffer, right? So now the insured is, if there's an answer, if there's a question, we have time to think of an answer. They're not catching our client or the insured off guard. We have time. We can ask that question to the insured. We have time to think about it and answer the right way. Because again, no one's trying to answer wrong, but the right way to say it, if you say it differently or the wrong way, can get your claim denied. So yeah, you want to get one involved as soon as possible. And if it's been denied, again, anytime point of a claim, if you didn't know about a public adjuster, you just want to call, at least have them review a claim for you. It's free, right? We review claims all the time, so it doesn't cost you anything.
Yeah, I've had an experience where it seemed like they even undervalued the claim, like they weren't willing to pay out what would be needed to take care of the situation. Do you find that as a common issue?
Every estimate we look at, let's just say out of 100 claims we get in, out of the 100 claims, 95 huge underpay with huge value. 5 claims we'll look at and we'll say, there's stuff missing from the estimate. But if this is probably a better adjust or better carrier, better insurance company, there's a couple of things we'll give you pointers and say, hey, look into this. But every estimate, there's always something missing, undervalued, always. No adjuster. These adjusters get hundreds of claims, huge amounts of claims every week, every day. They just can't handle it. And they're looking to write an estimate, get it over to you, and move on to the next one.
Do you see any patterns in how insurance companies try to minimize payouts,
Oh,
particularly for multifamily or commercial properties?
yeah, 100%. No, especially now, bringing in consultants, anything they can minimize, they can have someone to prove why they can underpay a claim. So bringing in engineers, third-party consultants, right? Anyone that can say, this damage is previous. Jack wasn't maintaining his property. This damage is old, right? So they're just trying to bring in more people to back up how they can, they'll pay. It's unbelievable because they'll literally pay for like 10 consultants, engineers to not pay for something where it would be just cheaper to just pay for it right from the beginning. So that pattern we see all the time because we see the same companies that they use to write the same reports to say the same stuff on every claim.
They just
Jack, I can literally show you two different claims and show you a report of the same engineering company. The report's the same. The only thing that changed was the person who wrote it.
Well, I would imagine that it works more times than not. You probably know the statistics. How many people actually engage an adjuster such as yourself?
5%. I think the study was like 5 to 10% that people have actually hired a public adjuster. So think about that, how small it is. And the amount of money we bring, the value and how much more we get our clients, it's crazy. It's such a small percentage. And then that's just public adjusters. And then even a smaller percentage is attorneys.
Right.
So 90%. And that was if you read the book there's a good book From Good Hands to Boxing Gloves, right? It's an older book. And it's based on that study and how Allstate went and became $1 billion company. It's by underpaying claims, but it's that whole only so many people fight it. So if they underpay 100% of claims, only 10% of people are going to actually hire someone or do something about it. The other 90 are just going to take it. And they just got away with underpaying 90% of their claims.
Yeah. Well, I mean, they're incentivized to just copy and paste it.
Exactly. And there's just not enough attorneys. The laws aren't, like in Illinois, for example, if a claim is under 100,000, it's rare you're going to have an attorney that's going to want to take on a claim because the laws aren't there to protect the consumer. Even though you think it's more of a blue state, you think that the laws would kind of protect the consumer, but they don't. They're all in favor of the insurance company. There's no bad faith. There's no punitive damages. So the attorneys really don't, they need a claim that's large. So if they take a fee, they want to make money on it. So
If you are facing some of these struggles, allcityadjusting.com. If you found some value in what we're talking about so far, do us a quick favor, share this with one of your investor friends. And if you're watching us on YouTube, I appreciate a like and subscribe. So, Andy, can you give us an example of somebody maybe you recently helped and maybe it was undervalued and you were able to make some significant impact?
yeah, there was a claim. This was last year. I didn't discuss this one with you on your previous one. I think this was before. I was at church. It was a brother Elijah. There's a lot of videos on YouTube about him. I like referring to this one because of the huge difference and who brother Elijah is. Let's start with he's a person that buys old churches that are closed down and turns them into schools in neighborhoods that need it and helps a lot of people. It's just a good story. So he purchased this property for about, I think, between 5 and 700,000. So when he had a fire, the insurance company's adjuster was paying 700 something thousand, just say 700,000, right around there. And so he thought, hey, this is what I paid, close to what I paid. Then he had a contractor come look at the damage, and he said, and which the contractor said, hey, I think there's a lot more damage you have here. You should probably get this checked out. So he found us online, called us. We worked this claim, I think, 3 to 4 months. They brought in consultants that only built churches. I mean, it was pretty serious. That claim settled for close to $3 million. Yeah, it was like a $2.3 million increase in claim amount. And that's just right. There was other coverages he had that we went after, but that was the main one.
That's an extreme example, but do you typically find your services more than pay for itself when you get engaged?
In pretty much every claim we take on, because we review the claims, right? Like even in the beginning, if you call us and you didn't file yet, right? We'll review it, make sure that if we're filing for you, we're handling it, that we're going to bring value, that we're going to get you more, right? Even if our fee was 50%, that's always kind of our back end. If we were charging 50%, is our client still going to be in a better situation? And that's an outrageous fee, right? We charge a flat 10% unless we come in on the back end or some kind of a supplement situation. But if we're handling a claim right from the beginning, it's always 10%. No matter what state we work in. But yeah, the motto is if we were to charge 50, would the client still get value from us? And in that claim and most claims, 99% of our claims, the clients would still walk out better than they would without us. There's one we just finished with Nationwide. It's a previous client of ours. Huge hail. They had 3-inch hail here in Illinois. They offered him 8. It went on almost 8 months. That one just settled for 67,000. Right. So again,
Hmm.
the adjuster just was, I mean, he had something against us or the insured. We ended up having write a letter to like the CEO and everyone at Nationwide. And then the next day they contacted us and settled that claim in like 5 minutes with us.
Hmm.
But they sent out literally 4 people, 2 engineers and 2 consultants to that property. They probably spent at least 10 grand on these consultants. That was look,
Yeah.
one of the, I mean, one of the easiest claims. If you drove by this house, Jack, you'd have been like, I mean, the windows were blasted.
Can you talk a little bit about the typical timeline and maybe even the stress level? Like we talk about scaling and building your team in real estate investing,
Yeah,
and I can imagine when you're dealing with something like this, the amount of time and effort on the investor side of things could probably be a bit overwhelming.
huge. Claim goal is 60 days, right? To settle a claim within 60 days. But it's so unrealistic these days with what insurance companies are doing and delaying claims. It could take up to 6 months to get a fair settlement and to get a claim settled. But the great thing about working claims with management companies, investors, landlords, business owners, they all, majority of them have loss of income, loss of business income. Endorsement usually comes as a standard. So even if it takes 6 months, they're getting loss of income paid. So even though they don't have a tenant, they're getting that money every month. Usually we could get that up front. So they'll get that money during the time we're negotiating the claim, plus after the time to do the repairs. So they're not really losing out. So they can kind of breathe and say, okay, income's still coming in while we're negotiating and getting the right settlement. Different
Mhm.
situation when you have a family of 5, they just had a fire or water claim, they have to move out, and they just want to get their kids in. They're more pressed. With investors, it's a little bit different, especially that they're able to claim loss of income.
Could you give everybody some insight on like some of the things that they should proactively do to make this process a little smoother, whether it's engaging the insurance company directly, like what ducks should we have in a row?
100, if I could give, and again, me and my wife invest, right? We have our own properties. We have 2 commercial properties, duplexes. Like, so when you ask questions, Jack, and I look at the answers, I also look at from an investor side and landlord side. And the
Mhm.
first thing you should do is you should have a public adjuster as part of your team, right? And if you don't, and you do have a claim, call, because the quicker you call and the quicker you get that public adjuster involved to handle the claim, the outcome is going to be so much quicker, so much better, and it's going to make everything just a better process for you. And it's going to let you focus on what you do, invest and build your real estate portfolio. This is a full-time job. Handling a claim is full-time. Then you have the mortgage process involved, which once the claim gets paid, then there's a mortgage. There's so much details. And we just got on with the management company and, we talked with a bunch of the heads of the offices and they said the biggest thing is the freedom. Like they're like, hey, we used to have to not only deal with the management of all these properties, but then handling these claims for our owners. And now that's not the case. They can focus on everything else. But because again, it is a full-time job.
Mhm. I don't have any statistics on this, but we sure get fed the concept that we are dealing with natural disasters on a regular basis. So I would imagine, are we seeing any kind of changes trend wise in insurance coverage, or are there anything in particular regarding that we should be aware of?
The State Farm just announced a 1% deductible for wind and hail throughout is a mandatory. So if you have a $500,000 property, wind and hail, you have a roof claim, there is your deductible of 5,000, right? So the deductibles are going to really jump up on people and it's only going to be higher. That's probably the biggest one that you're definitely going to see. Besides premiums going up, deductibles and coverages for exteriors like exclusions. If you have an exterior claim for your roof, we're not going to pay for this and this. We're only going to pay for this. There's all kinds of stuff coming out with that. I think majority of the insurance companies' claims are wind and hail.
Do you find that those increases are being caused by increased natural disasters, or are you seeing it as
No,
increase in just product?
no. It was like COVID, right? People took advantage of COVID. And now with inflation, even though, it's when there's an opportunity, people will take advantage of it. With COVID, I thought a lot of corporations took advantage of COVID and raising rates and stuff. And they keep raising rates, right? For no reason. Natural disasters and wind and hail, like all this stuff, hurricanes have been happening for years. Is there more now? Yeah, but this is what they're kind of insured for. And they write this all as losses. So to me, I think it's more of a, hey, let's take an advantage. It's a situational thing. I mean, you're still paying your CEOs, huge bonuses and, your stocks, there's insurance companies that their stocks have never performed better, yet they're paying out all these claims. How can that be? So
Have you seen any other trends right now? And you've been doing this quite a long
yeah,
time. What do you?
and
Well, I'm not saying you're old.
no, but when I looked at the first podcast I did with you, I'm like, man, I look like I'm much younger. I'm like, shoot, this business is definitely getting
So, are you seeing any trends right now?
trends, with underwriting and insurance policies. What I read or what I find out in our groups is kind of the only information I have on the inside, because we don't do any underwriting or policies. In terms of claims, just the claim process and insurance companies switching to using consultants and third party people and kind of trying to push on their liability, meaning let's bring in Jack from REI Mastermind to look at this property and tell us what he thinks. So then if he thinks it doesn't need to be gutted, then we'll just say, well, he said it. And they kind of want to push the blame on another person. So if it goes to litigation, it wasn't an insurance company that did something wrong, it was a third party. And that's kind of the route they're going. And it's just delaying the claims process. So that we see more and more, and pushing everything on independent parties, independent adjusters, right? So less and less staff adjusters and staff people and more outside parties involved in claims.
Are you seeing any inroads regarding AI and a few of those tools?
AI, have we seen AI? We've seen it with personal property a lot, with inventorying. I mean, we use it's helping. With insurance companies, when it comes to claims, especially for us, large loss, the biggest thing with AI, we do a lot of, the measuring of homes. It used to take a day to measure a whole home. Excuse me. Now with a camera, with an AI camera, you can go through, sketch a whole home, have an image, have sketches, have everything within hours. So that's a big thing. But we'll definitely see more. I mean, I'm pretty sure insurance companies, again, you're talking about $1 billion industry, you're going to see a lot more AI brought on by them.
The next iteration is going to have some sort of AI agent doing that initial review.
The one thing, yes, you're right. And then, they're definitely using automated tools to look over estimates. But in the end, when it comes to large loss and fire and water, you need that person on site. You need to discuss the damage. You need to see what's behind the wall. So it's going to take more than just an AI computer to get a fair settlement anyway. I think we're okay. I think our industry is okay for now, but we'll see. I mean, it's definitely changing in every sector.
Just to remind everybody, allcityadjusting.com, allcityadjusting.com. Andy, you mentioned they could also reach out another different ways. How else could they reach out
Yeah.
to you directly?
If your listeners want to reach out and call me anytime, my cell phone, have questions about policy claims, it's 708-655-4186. That's my direct line.
Well, before we jump into the rapid fire and close out this episode, is there anything we should have tried to hit on here today?
No, I think we covered pretty much everything, Jack. I think the importance of public justice. If you don't believe it, there's a book I mentioned, From Good Hands to Boxing Gloves, that I definitely recommend to any listeners.
What lie do real estate investors often tell themselves?
What lie do real estate investors tell themselves?
Yeah.
I think a lot of investors kind of, falsify their numbers when looking at a property to make sense more if they really want it. Instead of looking at the worst case, they kind of push in the number and say, well, the projection, once you buy it, it's going to look like this and this. And it's not the case. People don't give themselves enough room for error.
I see that a lot with people who will run numbers based on projected rents instead of what's being collected now. Try to avoid that. And we only purchase based on the existing numbers because in our mind, if they could charge that rent, they would have.
And we were looking at a large, it was a 53 unit, 56 unit. And it's at least $1 million overpriced. And when we talked to the agents, they said that the seller is basing it on numbers that's going to be in 5 years. Like he was projecting already 5 years ahead that what the property is going to be worth, what the property is going to bring in. So yeah, it's hard to buy a property on projections.
If you could go back in time and give your younger self a piece of advice, what would it be?
Start reading earlier. Start reading books earlier. Definitely. Wish I got into books earlier and got a lot of knowledge that I know now.
Were you resistant on reading books?
I never knew about books, good books in high school or grade school. I just thought
Yeah.
books were boring and biographies and just stuff I didn't care about until, mentors and people introduced me to books like, Rich Dad Poor Dad and other books that really opened my eyes to books.
Yeah. It still blows my mind, the concept that for like $20, you can buy a book and get a consolidated, summarized version of somebody's experience. I can't
Yes.
imagine anything being a bigger bargain.
You're 100%. Listen, I was a smoker, smoked since, I was from high school and I was smoked. And I quit actually 2018. And how I quit was I read a book. There's a book called Alan Carr's Easy Way to Quit Smoking. And I was introduced to it by a friend. And, he said, hey, I quit because I read this book. And I said, there's no way you quit because I tried everything, right? Every method there is to quit. I couldn't quit. And so I said, well, hey, a pack of cigarettes is 10. This book is $10. If I read it, it cost me a pack of cigarettes, and read the book, quit smoking. So yeah, there's nothing better than books, especially ones that interest you, right?
Do you have a book recommendation, or what are you reading right now?
Right now, the book I'm reading right now, it's Deep Work. Just started it. I think I'm in 2 chapters. It's called Deep Work. Just talking about focusing on what you're doing right now and not multitasking, which I have a problem with. So it's very good. It's right now it's getting to all the details and stuff. You got to go through the first chapters to get to the good stuff. So
And what single strategy or tool have you implemented that has had the biggest time-saving impact to you or your business?
setting enough time for myself in the mornings to work on the stuff that's really important, right? But just literally putting in an hour or two, turning off my phone and just focusing on what's important and what's needed to get to my goal instead of letting the day kind of control me, doing stuff, before I check emails and all that stuff.
Well, allcityadjusting.com, Andy Gurczak. I really appreciate your time again, Andy. And these are all going to be clickable links in the show notes, but I hope you'll come back a little sooner next time. This was great.
Yeah, I'll come back every month.
Thanks.